Here is your Bull and Bear Stock of the Week. A gaming and a restaurant company top this week's Bull and Bear of the Week list. We're talking about the Bull and Bear Stock of the Week, and we have Shiraz Mian here with us to give us some details on why he chose each for the category that he did. And, you know, looking through the backgrounds on these two companies, it's really not hard to tell which is which. Let's start with the Bull, the gaming company, Wynn Resorts Limited, WYNN, the ticker symbol. They've been making a lot of headway in their business lately.
They do. And the reason I picked them to spotlight on the company, despite they had relatively softer numbers in the recent quarter, that they are a play on the long-term growth potential of the Macau, China, as a major gaming destination in the Asian market. And they're also a play on the improving fundamentals of the Las Vegas Strip. So on top of that, the company has an excellent balance sheet. They pay a dividend. Steve Wynn has a way of giving out these one-off special dividends on top of that.
Yeah.
So overall, a very good story. Now, folks have been concerned a little bit about the growth outlook in Macau, China. That has been weighing on the Wynn stock for the last few months, but I think most of those fears are unfounded. And the long-term growth potential is second to none in pretty much all of the gaming destinations worldwide right now. On top of that, the valuation for the stock does not even discount the optionality of this so-called Cotai casino that they have in the plains. There's still some regulatory and approval process that the company has to go through, but that's another long-term growth attribute in the Wynn story that is not even in the current stock price. So overall, the long-term improving fundamentals of Macau, recovery in Vegas, excellent balance sheet are the reasons for picking Wynn as the bull.
Yeah, a strong brand name that seems to be just getting stronger in that gaming space.
Absolutely.
The restaurant company is Darden Restaurants, DRI, the ticker symbol in the Bear category, and they've been having some issues in their Olive Garden unit for a while now.
That's the primary reason. In fact, Darden had issues in Red Lobster and some of the other brands as well, but they have done a pretty good job in turning those brands around. But Olive Garden is something that's really keeping them down right now, and that's about half of the company's revenue. Now, they do have a plan in place that they articulated to the street at the last quarterly release.
Yep.
And they're looking for about 6-7% top line growth and 2-3% same-store sales growth. But those numbers may be hard to achieve given what's going on in Olive Garden. Olive Garden is really going through a tough time. And their plans on the marketing end, on rejigging the menu, those may be longer term problems that even if they get fixed, may take much longer. And on top of that, you have this commodity price pressures. Inflation on many of the food items have come down, but in the protein category, it's still running quite high. And that's expected to continue weighing on the margin side for Darden. Now, I'm not looking for very high downside risk in the stock because they have a very good balance sheet. They pay a fairly juicy and attractive dividend on top of that.
Yep.
But their growth outlook for 2012 assumes very strong growth in the second half, and I don't think that is achievable given the issues they have in the Olive Garden concept restaurant.
They were one of the few casual dining chains to actually expand during the economic downturn. Was
Yes.
the timing of that move off, maybe?
I think that is a smart move in the long run. They generate a ton of cash. The balance sheet is very good. They do give out a good dividend. They do buy back their own stocks. So investing in the business was one of the ways in which to grow the company, and that has been kind of one of the positives. In fact, in the Darden story, if they can turn around Olive Garden, which is not implausible given what they have done with their other brands, then it will turn out to be a lucrative alternative. But in the near term, over the next 12 to 18 months, the stock will likely remain under pressure.
Okay, do you own either one of these?
No, I don't.
All right, don't forget, we post the bull and bear of the day for your consideration and your review on our homepage, Zacks.com. So if you're not there already watching this video, check it out. Check it out every day because the bull and bear stock of the day changes every day. With Shiraz Mian, I'm Terry Ruffalo.